Hello, everybody. What's good? This is your boy Deco and Izar, and welcome back to my YouTube channel. So today, guys, it's not all about motivations and everything. It's all about just sharing a little bit of knowledge that I have with regarding how I really approach the markets. So, nonetheless, this is FX Coach, your mentor, and let's get to it. So, a lot of people have been sending me emails, have been commenting and telling me that I need to do a video whereby I talk about my nature approach towards the market. So it's basically simple, guys, because I tend to focus more on what the market is telling me than whatever I might think might happen, or whatever that I think it's a possibility to happen. So basically, I'm a price action trader, guys. I read in between the lines of price action, how the prices are moving. I check what the current price is doing and what did the previous price do. But the one rule that I always have is that whatever might be happening at this current state, at this current price action over here, I must not forget to always look where left, because this helps me to actually discover the areas of sensitivity and areas of value whereby prices are most high possible to turn or to reverse, or either to trickle a lot before actually breaking out to the upside or reversing to the downside. So let's just do the practicals of actually how I literally go about my nature approach towards the market. So we're going to be looking at Euro USD, since it's one of those major pairs that everyone most definitely trades. You understand what I'm saying? So what I normally do first is I like determining what happened so that I can literally see what are the price patterns that are literally valued, and or the price movements that literally repeat themselves quite often, so that I would know what to look for. So in this instance, we could see that this was an impulse move, and then this was a correction for some sense, then impulse, correction, and then it started correcting without impulses. So it started correcting, as you can see now. This is an impulse leg, and then correction, impulsive leg, reversal, push to the upside, to the downside, correction, push to the upside, correction, push to the upside, correction, as you can see, push to the downside, correction. So now I've seen that it actually respects patterns such as flags, also such as ascending channels and descending channels, because as you can see right here, this was a large version of a flag, if you can look quite closer to it. And then this was also a mini version of a flag. This was a descending channel. This was a rising wedge, and then it dropped. This was a rising wedge, it dropped, W formation, and then a rectangle consolidation channel, and then falling wedge, impulse to the upside, and then also, as you can see right there, it's an ascending type nature, push to the downside, rising wedge, and then most probably there's a high probability for the price to go down from this level. So that's how I literally discover what's going to happen in the near future. So now we have determined how the market moves. It literally respects continuation patterns such as consolidation channels, rising wedge, or falling wedge, or to say descending structure or an ascending type of nature. So let's erase everything right now and start analyzing our market. As you've seen, guys, on a bigger time frame, I've literally established my overall structures, meaning the outer structures. So right now I'm looking forward to seeing what's happening within lower time frames to understand what are the inner structures within the outer structures. So as you can see, this was not respected quite as we thought, and then right here it's a ray line that we use to actually discover the area of sensitivity, whereby you can see every time prices touches here, these levels, they literally turn. As you can see, every time prices touches these levels, they turn. So it's most important for us to discover these so that we be able to read in between what price action is telling us. So let's continue. So what I mean, guys, when I say we read in between the lines, as you can see, you are most high definitely going to discover a lot of structures created within a price action or a price movement. So right now, as I've looked closer to the market, I quite discovered some few aspects. Remember, I said this is the ascending channel, but in overall, you can see that prices are within an expanding channel, and within this expanding channel, we're going to expect some quite a little bit more volatility with regarding how people would need to profit from these levels. As you can see, we normally understand that when these kind of patterns occur, they reference or they come to confirmation for reversals. As you can look quite closely here, we were expecting it to come till this far to most probably complete the 90% rule that we have, that price action least an impulse, the next impulse needs to at least cover 90% of the previous correction. So that is also the role of my strategy that I use. So my strategy is pretty much simple, guys. Make sure you do subscribe to it. So yeah, so it needs to fit in the 90% of the previous correction. So this was a correction in this sense, and then the 90% would have most probably been here, somewhere about here, to just leave up this small space. Then this could be the 10% that is left. But as you can see, it only completed most probably 80 or 70 over here and then pushed back up. But not forgetting that, guys, we have an area of sensitivity right here, right? This is an area of sensitivity. If we can look at it, prices normally turn every time they reach that level. So now this ray line is now not useful, so let's remove it. So we have discovered our zone right now. So as we discovered our zone, also this we can remove. So we have discovered our ray line now. So we would know that from this current moment, a lot of things can quite happen. And what is it that we need to do? That is why we always say Forex needs patience. That's when we become patient. Because the next movement we're expecting, if the prices approached the upper zone or this zone in a corrective format, creating an ascending type of nature, we would know that price is literally going to drop from that point to most probably this point. But the way the market is literally approaching the upside is literally quite tricky because it's impulsive. So if this is an impulsive leg to the upside towards a zone or a structure, which is a resistance structure, there is a high probability that it might break out to the upside. And for us to have those clear versions of buying opportunities, we need to get something in nature of a continuation pattern to go to the upside. It's either from here, it's a falling wedge, or it's a rectangle flag, or it's a squeezed flag, something like that, so that we can be able to move or push to the upside and literally capitalize from the market. So, but in this instance, it's quite tricky for us to actually set price directions because a lot can happen, you understand? That is why we say Forex needs patience, especially the strategy that I use. It requires patience, but once you catch the market on the right side of the market, you literally profit long time. So that's what's happening. So right now we use the Euro USD as our example. Let's go to a different pair. Pair number 2, Swiss franc Japan, CHF-JPY. So as I've mentioned before, that I like going on the bigger time frames. The reason I go to the bigger time frames is to determine my overall, or to say my bigger pictures or the outer structures, so that I can literally see what's actually happening within the markets. And that helps me to actually discover
what entries am I looking for. So as you can see, we have our low right there. We also have our high right there. So I would say we are on a bullish market. So you're actually in a bullish market right now. So as we have determined our overall outer structure, it's time to go inside to understand what's happening within the markets, actually to also discover or to determine our inner structures. So we go to the 4-hour time frame. So we go to the 4-hour time frame. You would see that a lot of prices start becoming quite clearer, because now as you drop it lower, guys, it gives you a lot of I'd say a lot of edges to actually cater for. Okay, it doesn't fit right here, so you put it right there, and then we cater from here to there, and then we read what's happening inside the structure. So what do? We firstly read how the market is moving. As I'm seeing right here, the market is actually moving in this type of nature. So you can see, okay, that for that, this was an impulse move. So correction also, correction also over here. Correction also over here. And then we literally read, if ever it created a correction at first leg and creates the second version of a correction again, it tells you something, that it's building up towards something. That is when we discover that we are now formulating a trend over here. If we can look over closer to it, you're gonna most definitely see we are now creating a trend towards that level, because every time prices reaches this level, they literally turn. So as we created that, you would also see that even at the toppest point right there, it is also an area of sensitivity, right? Even at the top right here is also an area of sensitivity. So we call this a pattern inside a pattern, or a structure within a structure. So this was a push exhaustion, which it means impulse move, correction, impulse, correction, then impulse. But this impulsive leg was quite trickling towards the upside before it literally started giving a clear version of its movement. As you can see, it was trickling, moving up and down, creating an ascending type of nature. So we would remove this, and also determine something that, okay, so we have reached to the top, and as we reached the top, we pushed to the downside, we broke out, started creating a correction. But when we started creating a correction, we created a correction after a correction. So there's something about this, guys, that I think I'll need to teach you, but you would only know it when you buy my course, when you buy the course or my strategy. So I'll just explain a sneak peek about it. So what happens is, formulating either a descending structure or an ascending structure, sometimes prices tend to break out and then create a pattern or a correction that we call an ascending after an ascending, to formulate a double top type formation or either a double bottom type formation for prices to go down. But this last leg of price action is there to trap the traders on the wrong side of the market. So this is what actually happened right here. I remember I took this trade the other day. This is what happened. So literally, as you can look closely right there, this was the previous high. Remember what I said, the rule is always that even when the price action is somewhere right about here, don't forget to always look left, right? Let's cut prices over somewhere right about here. So as we have cut prices, a lot of traders would have said this is most probably gonna be a continuation of buys because sells failed. But when it comes to me and understanding price action, it's not actually something like that, because I really understand how price movement quite work out and how do traders get trapped on the wrong side of the market. So if it was me applying my strategy and my Forex knowledge, I would know that, okay, so we come from an ascending type of nature structure from here. And then the breakout was not as impulsive as it needs to be for us to confirm that it needs to come retest and continue. So the way it broke out, it was quite corrective. And imagine, you cannot confirm continuations over a corrective breakout. A breakout needs to be impulsive, not corrective. If it's corrective, there is a high chance, meaning there is 95% that it's gonna turn back to where it was. The same as here. So as you can see, it was corrective, it started trickling, and then it went back to where it was. But going back towards where it was, it also created another type of an expanding, ascending type of nature structure to complete a double top type formation right here. As you can see, this was a double top type formation. The second leg, this was the first leg. So according to me, this was my entry on this trade. I said the market will need to push to the downside, give a clear correction over here, and then that's when I'm gonna have my first entry over here. That's when I'll have my first entry over there, and then go with the down. Far most, as it continues to go down, after pushing towards the downside, I'm expecting it to break this low, this support structure over here, give a clear correction again, and then we enter our second entry over here. We give our second entry over here. This was our first entry, this will be our second entry. As you can see, that will be our second entry. And then should the market continue pushing to the downside from here, break out this structure and then give us another clear version of continuation, that's when we go for our third entry over here to push with it to the downside up until it completes the 90% rule of the previous correction. Remember, this is an overall correction inside it. So let's look at how the market would react as we have set our targets right now. So let's go. So guys, as you remember, I mentioned that the minute it creates this, is the minute it breaks out, it needs to give us a clear correction or a clear version of a continuation pattern. This is a squeezed flag, so we're literally looking forward to going with it down. So we're gonna have our first entry over here and our stop loss somewhere right about here, just to give it even more 5% to breathe, to see what happens next. So let's continue and see what's gonna happen. So as the prices are now here, we're gonna put some stop loss over somewhere right about here, just to protect some few profits and don't take unnecessary profits back to the market. So let's see what happens next. We are taken out. So as I've said, that this area is also an area of sensitivity. That is why prices, when they reach this level, they literally bought. So it's about determining what's going to happen next for us to be able to capitalize from these trades, reading in between price action. So let's see what happens. As you can see guys, prices finally reached our target, though it didn't move the way we were expecting it to move. So that's what I wanted to let you guys know about my nature approach about the markets or forex trading, and especially the targets I put for myself and the discipline I put into myself, especially when it comes to analyzing the market and literally looking at the entry urges that I actually look for when I approach the markets to profit from them. And that's how it is. So guys, nonetheless, this is Coach, your mentor, and I'm signing out.